Hi guys, and welcome to the second edition of Bellrock's Market View. So let's see what is moving the markets next week, and let's see which level are important to watch for next week and prepare and make a solid plan. Like I discussed last week, we are currently in a consolidation cycle or sideways cycle, which is very hard, especially for new traders to trade, because that kind of a market is tending to stop you out and you would be able to lose money much faster than in a trending market. Therefore, if you see that kind of a market, it would be probably better for you just to wait the things to set up again and then try to enter. So important for next week is of course the 318 and 64 level, which is resistance, and right now we are consolidating above the 9 and the 20 exponential moving averages, and if we break above this level, we are going probably to see or test the 324 area, and after that, maybe depending on how everything is going, the 339 area, which is the resistance and all-time high, of course. As long as we are holding those higher highs here, I am still bullish, even though the corona cases are increasing and we don't know how the earnings would be for the next weeks. As long as we are holding those 200 moving averages, I am still remaining bullish. Now, especially in this kind of market cycle here, like I said already, it is important to stay patient and look only for best case setups and best risk reward setups and not jump into any stock out there which is moving. So if we break the 318 and 64 level, we can see a little bit of push on the upside. Therefore, I'm waiting for next week to see how things are going to develop and where are we going to open. If we get out of this consolidation area, it might happen that we are going to see something on the downside. So if we break this level of 309, we could test again the 200 exponential moving average, which is the 298 and 18 cents, or better 300 area. Now, of course, I don't know if we are going to break above this level. It might also happen that we are going to see some downside and break this range here to the downside, which is the 309 area. So if we break this level to the downside, the next support would be the 200 exponential moving average, which is the 298 and $90. So let's take a look at the Qs. This is one of my favorite charts. I've been trading that in the past a lot, and this has really been a beast mode in the past, guys. So that's just insane how this thing is going up and making very tiny pullbacks. You are not even able to get into any of those because they're so small. So at that point, I made last week a mistake, so to say, because I jumped here. I saw that reversal candle here. I saw that everything is overbought. So I jumped in and bought a put, which was a very small position. And I realized this is not going to drop, and I got stopped out the second day, which is okay for me. So this is one more example of why I am not shorting, because if we are in such strong bullish market, especially in this Qs, which is very strong bullish chart, it is very, very hard to catch the top, and you don't know if those things continue to go up. So it might go up another 5 or 10 days. You cannot fight with those things. So for the newbies out there, guys, don't try to fight those things. If you see something like that, just take the loss and move forward. Wait for the next opportunity. Don't fight in those kind of environment with a bullish trend. It is just not going to get you anywhere. And like I was discussing in a lot of my videos, especially in such kind of a market, or especially with the Qs, it's always the best idea to wait for a pullback and get long. You would have much more reward, very less stress, and you would be able to make much more money instead of trying to catch the top on any of those. So that's just my advice to the new traders out there. So let's draw real quick the lines here. This is one support area at 231 and 40. The next one is here, which is the 236 or 237 area. And like we see, since that point, we never saw really a pullback. So we're here already at overextended level. The problem here is, of course, that we don't know how long this is going to go. So it could continue a little bit more. I would be happy to see some kind of a pullback into that area, which is also the 50 exponential moving average. If this happens, I would be looking for new stock opportunities to buy. And of course, I'm praying for that to happen, because right now I'm not able to trade, so I'm just holding my remaining positions, taking some profits on the way up, because I'm mostly invested in the tech sector, as some of you already know. So I'm trying to wait patiently for new setups, and of course I'm not going heavy right now in any position, because we can see at any time a pullback, which could make the stocks which I am invested in also to pull back. So that's my view on the Qs, guys. Stay patient here, don't fight the uptrend, and don't try to get short in such kind of environment. Now let's take a look at IWM. I'm not trading a lot of stocks in that sector, but I'm just going to draw for you guys the lines in case you're trading that. And as we can see here, like I discussed already last week, we are trying to hold those exponential moving averages. The IWM tried to reclaim the moving averages a couple of times, but came back down, and right now we are right at the exponential moving average 50. So if we reclaim that moving average and leave that sideways cycle here, we might see some upside. So let's draw the line. The 136 and 50 is one of the short-term support area, as well as the 133 and 33 cents. And like I said, here we are also in this situation in a sideways market, which just basically means we have to stay patient and see what direction the market is going to go. So we might see a breakout on the upside, but we never know. We also can see a breakdown on the downside. But as long as we are holding those levels here, the 136 and 50 and the 133, I am remaining also on that one bullish. And here is the next resistance. I am drawing that for you. That's the 145 and 50 cents. And the next one, if we leave that consolidation cycle, would be the 154 and 24 cents. So one more time, guys, if you see that kind of environment which is sideways, if you are trading a trending strategy, which means you are buying breakouts or pullbacks, you have to stay very patient here, because this could continue for a while. You don't know how long those consolidation cycles are remaining. You just have to be aware what kind of environment are you trading, and is the strategy which you are trading fitting to that kind of environment. In the most of the time, the most of the traders are trying to trade, let's say, a trending strategy in a sideways market, for example. This is not going to work. That's very hard to do. There are a lot of strategies out there which you can use, especially for sideways markets, like non-directional trades with options and so on. But if you see that kind of environment, just be aware of that and adjust your strategy if necessary, and make sure you're not losing money in that kind of environment. Of course, I'm going to send you the 3 top stocks which I would be watching next week in my watch list, which you can find at sylviabellrock.com. And it's free for you guys. I'm doing in-detail research of those stocks, fundamental and technical research. You can subscribe, and I hope you learned something from that and you're prepared for next week. So going into next week, let's see what earnings would be released in which sectors. So I'm checking the earnings for the companies which are releasing on earningswhispers.com. It's a free website and very useful if you want to check what time and what date which company is releasing the earnings. So in this case, going into next week, we would have a lot of banks releasing earnings. On Monday, first of all, we would have Pepsi, which is releasing earnings. On Tuesday, we would have Delta Airlines, JP Morgan, Wells Fargo, Citigroup. So those are all banks. Here the bank sector would be releasing earnings next week. It's important to know that. So if you guys are trading banks, just be aware of that, because you don't know in which direction this may lead the stocks which you're trading. So if the earnings are bad, you may see some kind of a gap down. If the earnings are okay, depending on the reactions, you might see some kind of a gap up. So just be aware of that. Try to reduce your risk if you are into those stocks, and don't jump in right before earnings. Especially on Wednesday, we have here some more banks, as we can see. So basically for next week, we would see a lot of reports from the banks like Bank of America. Here we would have also earnings for Johnson & Johnson, which is an interesting company which I'm looking at. Domino's Pizza, which is a very good company in my opinion. I was trading that a lot of times in the past. I am keeping on watch this one as well. And we can see here also some more financial companies releasing earnings. So that's it, guys. Stay safe. Don't overtrade. Be aware what company is releasing on what day earnings. Don't jump in right before the earnings. And I'm going to share with you my watch list. I hope you learned something from that, and see you next week.